of the world.
Now, would I be giving away too much if I hit on his?
No, I wanted to talk about that anyway. You were going to talk about
this is fascinating to me.
Go ahead.
So you say it's time to turn to our 7th president for financial advice. I forgot my $20 bill. Who's on the $20 bill?
Jackson.
Jackson. Why should we be turning to Andrew Jackson for financial advice?
Because if you take a look at, I actually made a portfolio of 9 stocks, believe it or not, that you could buy for $20. You could have bought 2 days ago for $20 and bought 1 share of all 9 stocks. And there's a couple of them in there, Citigroup, GE, GM, some very big names that, as a matter of fact, 5 years ago, it would have cost you over $300 to buy these 9 stocks. And I think out of that group of 9, there could be 2 or 3 that go bankrupt. Don't get me wrong. However, there's going to be some that come out of there so much stronger 5 years from now that you throw that 20 and you're not throwing a dart trying to pick the one winner, but you get that basket of these beaten down laggards that I think can take off.
So you're saying for a mere $20, an investor can buy this portfolio that you're referencing and buy a share of Citigroup, General Motors, Ford, General Electric, Bank of America, AIG, Office Depot, Eastman Kodak, and AMD, all for less than $20.
And you're actually pretty diversified. You go from technology to car makers to financials to Eastman Kodak to Office Depot. And if all 9 of them go out of business, I think the last thing I'm going to be worried about is stock market, my money, to be honest with you. So
right.
I think you have a chance that a lot of them do come back. Maybe Ford makes it, GM doesn't. So it's just... It was kind of something I started out of fun, to be honest with you, just at first, just to try to show where we've come in this market, that we can buy 9 stocks that we would never think would be this low for $20.
Yeah, I put all the tickers on here, so I'm waiting for some of the comments to start coming in on what people think of this scenario or this portfolio that you put out there. So I'm sure we'll have some coming in. Go ahead, Sandra.
Yeah,
what do you want to say?
yeah, and I think it was you're asking if they would want to buy that portfolio at current levels, and I was just looking at your notes here. You say you can get those 9 stocks for $20 now. 5 years ago, a share of each of those 9 stocks would have been $315 and change.
It's amazing.
It really is.
Absolutely
that tells you
amazing.
how much we're down.
I've got a lot of comments coming in from the internet that a lot of people have been posting this over the weekend, and I'll tell you what, they've been negative. I've got a lot of people saying you're absolutely crazy.
Bob in Fort Hood doesn't want any part of it. No GM, Mike Grant just said.
IMD, somebody said that.
Well, somebody did say
one guy.
You got one on your side, Matt.
That's all right. I mean, you got a lot of people on your think you're crazy.
Well, the logic, like you said, you started that for fun, but what's the logic in it, kind of over what time frame, and what do you think maybe something like that would be worth, I don't know, a year from now? Or would you prefer that you talked about it over a longer time frame?
I would look at it over a longer time frame.
Yeah.
I've looked more probably 3 to 5 years. And, you know, I started as fun, but after doing a little bit of research and looking into it, I thought to myself, well, maybe this is something I take 5% of my client's portfolio and actually put it in.
But why is it, as Andrew in Ohio suggested just now, a lotto ticket investment? Is it better than that?
It's better than a lotto ticket investment, absolutely. I played a Powerball and I never even get a number, let alone, you know, this. I really believe, even if you take one of the companies that can take 2 of the companies, they double between now and the next 5 years, even if 3 of them go out of business, you're still going to make money. So I think you're taking a lottery ticket, but you're diversifying it through 9 lottery tickets, really.
Yeah, all right.
Yeah, I mean, you've even got Matt here. He says, or Paul, he says, I could buy that money, use that money to buy a pizza.
Exactly.
So, I mean, this is the state of mind of people right now and whether or not they're going to buy into these companies.
It's amazing, and I think, I mean, it is a lotto ticket. However, I mean, this is when wealth is built. Within carnage, there's opportunity.
Sure.
I mean, when the stocks are hitting new highs, that's not when your wealth is built. You're chasing performance.
Yeah, and that's the tough part for people now. Is like we get a lot of people that email in that are afraid to get back into the market, and that's always been the case, is that people sell when they're most afraid, and when it's the time, I guess you could argue they should be buying. Only problem with that logic is we've heard it for months.
Exactly.
In other words, people said, all right, stocks are down so much, add to your 401k.
Right.
And you know what? People are getting hammered on it and saying, well, I don't know anymore.
Yeah, the contrarian view has worked for years on Wall Street, but it hasn't really worked in this downturn because, like I said, I was saying the same thing last October. This has to be the bottom. I mean, when I have clients calling all day, the phone doesn't stop ringing, it usually tells me we're close to a bottom. We've had that, and I've actually had that for months, unfortunately. So it seems like the fear just keeps growing and growing. However, you look at the volatility index on the market, and the VIX, actually, the volatility, it's not measuring fear that high anymore. So now it's kind of like that slow death, which I actually prefer almost just to have that big capitulation than the slow death that we're having coming down right now.
Well, we've talked a lot about the VIX, which topped out almost 90. It was 89.5, and now it's at under 49, so that's a much different measure of fear than what we had in the past. I mean, you're saying you'd like to see that tick up a little bit again and get it all out of our system. It just doesn't seem like that's going to happen.
I don't think it's going to happen either. You know, but then I started thinking, well, maybe is it the VIX that we should be looking at, or should we be looking at the American investor and seeing what type of fear they have in them, you know, and what we hear on an everyday basis from individual investors. And I'm hearing a lot of fear. I mean, I still think there's a lot of fear out there.
Yeah, guys. Hey, I'm watching our poll, which again is
Google's in the lead, right?
What should replace Citigroup in the Dow if Citigroup were to be yanked from the Dow? Google taking over the lead here. It's got a 37% of the vote.
It surprised me Visa has 30%. I don't know. It surprised me
there
that
must
they're
be.
getting that
I think
many
the
votes.
logic there would have to be, and anybody feel free to keep weighing in on this on the comment board as well, would be that if you're going to take a financial, because the way we posed it with Citigroup's coming out, you'd want to counterbalance that with some sort of financial, and Visa would, not exactly apples to apples here, but it would fit the mold more than say Google or Apple or Cisco would, right?
Yeah, I mean, I saw one of our viewers wrote in and said, buy Visa. I mean, with the amount of money that I'm paying Visa right now, they actually can tie that to an investment strategy, which, according to Warren Buffett's the best way to go.
Yeah, what do you make of that stuff?
I do like Visa, and what I would actually do if I had a little bit more of a complex strategy, buy Visa short American Express. I think American Express is in a ton of trouble right now, and I think they can continue to fall. When they came out and said they'd actually pay you $300 to pay off your credit card a few weeks ago, that tells me that they're at dire straits right now, that they're in a lot of trouble. But Visa, their transaction business is a little bit different, so they make the revenues a little bit different than
Right, so
American Express.
the business model makes more sense to you on Visa because they're just really processing the card transactions, right? And they don't have the exposure to the bad stuff?
Exactly.
Is that the idea?
Yeah, exactly. We're going to continue using credit cards, and probably more and more now, I would assume, with the state that we're in economically. So I think Visa's probably not a bad play, but until the market bottoms, they're going to continue to fall because they're going to get brought down with everybody else, and that's the problem. But if the market falls under 10%, you can see Visa fall another 20.
Good.
So I got to ask you, your Andrew Jackson portfolio strategy, it spurred a lot of viewer comments, obviously with you suggesting to buy Citigroup at these levels and AIG, Bank of America. What would you say is the potential for a return over the next year? Are you going to still take a hit on this sort of thing over the next year, or are you going to start to see gains over the next year?
I think we'll have a gain.
What's the long term?
Over a year, I think we'll have a gain. I mean, I don't want to call that long term, but over a year, I think we'll have a gain. 6 months from now,
who knows?
We may be able to buy it. I'm not sure who's on a $10 bill, but we may be able to buy it for $10.
And are you putting your money where your mouth is?
I'm still working on it. I thought about it all weekend. I was in Arizona at the pool, and I was actually thinking about it while I was sitting there. So, I actually really might. I've had a couple of my clients call and say that we're interested in doing this with our money. But it'd be very small. Like I said, it'd be a lottery ticket where maybe 4% of the portfolio into these 9 stocks.
So this is something cool to say on TV.
Exactly.
Right.
Yeah. I thought he'd get me on TV.
Yeah,
So.
well, you're here now, so we just want to be upfront and say you're not necessarily. Well, it's a serious point, though. You're not necessarily recommending that people do this.
No,
it's
I'm
almost
not.
like food for thought. It's like, oh, well, this is interesting. They're so low. Let's think about it and let's talk about it. But what would it take to do it is another question entirely. So
and it's going to be for the investor that has some disposable income that they say, I'm going to take 2% of my portfolio, let's say, for the average investor, and throw it in there. If you want to start putting money back into market, instead of buying, let's say, the spiders, you buy into these 9 stocks.
Well, and the logic behind it is not all these companies can possibly fail. A couple of these are going to thrive and get out of this.
And when you ask for returns, in 5 years from now, I think this can easily be a double. Absolutely.
Yeah, I want to know, just in terms of the general market, and guys can feel free to keep commenting on this. A lot of people keep coming to me and say, well, what's the reason I would buy stocks now? Especially if they say something like you did with the market, oh, I don't know if it's going to go 5,000, but I could see 6,000. In other words, a lot of people expect further downside and don't know what their motivation should be to buy now. Do they have any? Is there any motivation to really be a buyer of stocks right now? Our friend Richard Sutmeyer, for example, looks at the market on a technical level, just made a very bullish call today saying that there's a tradable bottom that was put in, the 666 level that's kind of ironic, seemed to have held, and now there should be some upside potential from that. Do you see it the same way or not in the short term?
Well, I'm answer in 2 ways. Short term, I think we've had about 12 to 15% rally in the next 3 weeks. I think we're going to have a big snapback. We are so oversold right now on a technical basis. Would I start buying now for a longer term based on that? No, I think it's probably going to be a bit,
Where's that rally, by the way? Everybody's expecting
But I also called for that last Wednesday, so I've been early. So
yeah, everybody is.
I mean,
everybody says the first thing here, oh, we're going to have a big bear market rally, and then today will be the day.
Yeah.
I mean, for what it's worth, we still haven't, we still haven't gotten it yet.
No, we haven't.
Right?
And it almost scares me now when everybody starts talking about it, because that's all you hear about. When everybody's looking for the rally, it never comes. Longer term, though, there is no major catalyst out there right now to get that average investor to put money in the market. There really is not. The only thing that I can say is if you're investing for the long term, you have a 10, 15, 20-year time frame, dollar cost average. Don't start putting money in your 401k. This is the time you want to be putting money in. If you believe in America like I do, 5 years from now, I think we're going to be much higher. We may not call the bottom, and once we get the bottom, is what happens is, say we get that bottom at 6,000, and market starts working its way back up to 7,000. You're going to see money run in there so fast, start chasing stocks again, because Americans forget pretty quickly, and I think we're going to see that money come back in, and by the time the average investor gets back in, and by the time we start talking about bullish events in the market, it's going to be too late.
Wouldn't that be nice?
It would be, Ralph. What a world. All right, Matt, thanks a lot, buddy.
Thank you very much. Appreciate it.
Hope you had fun. This is good to have you on the web for the first time. Matt McCall from Penn Financial, getting our viewers worked up with his Andrew Jackson
Hey, look at
portfolio.
that.